Hey folks, it's Adrian Zduńczyk, CMT Charter Market Ignition, and this is an AMA. This is an AMA, some sort of like a webinar. It's going to be a 30-minute session with Jakub, of Soil, that you can know them from Twitter, from X, under @soil_farm. They are our incredible partners specializing in RWA and legally compliant DeFi infrastructure by real-world assets, and it's Larry Fink, that just set the tone for the entirety of the crypto, just attracting so much of the RWA's, tokenized RWA's attention. And Soil is one of the best candidates that definitely come into my mind. And we're going to talk with Jakub today with a series of questions, short and sweet and fast. Kicking off without further ado, why should we care about the RWA sector at all? How do you see it going in the next years?
Hey Adrian, thank you for having me. Hey guys, yeah, sure. So Soil is a project that actually combines two different worlds and merges traditional finance with the crypto space. And actually, the RWA, or real world assets, how we call it in our sector, is nothing new, nothing special, connecting traditional finance with the crypto space. So simply using blockchain technology to update and utilize a technology that and improve the a bit obsolete technology that is right now in a financial system. So what we are doing, simply we are taking real world assets, like a different class of assets, like bonds, cash, real estate, and so on, and we simply put them on chain. So this is quite a high level summary of real world assets and their role in the crypto space.
Got it. Well said, well spoken, Kuba. And what I'm thinking, is ultimately, the mission and vision has always been there behind the Soil and bringing this, like I said, this infrastructure, right? How between the real world assets, between traditional finance and the crypto, which is still having a lot of stigma. So what is the mission and vision in the core for Soil that you want to propagate?
Yeah, so our main vision is being an antidote for the problems that are in a crypto space, and solve some barriers in adoption in the traditional finance. So what we are doing, simply, we know that in the crypto space, still quite new branch, especially when we talk about the finance. There is a lack of the transparent source of the yield and transparent business models that actually gives the comfort for the ordinary people to convince them to use, let's say, DeFi on other protocols, because simply they do not trust the protocols. They do know how the business model works, and they do not trust them because they don't know how the money or the yields offered by the different protocols is generated. So we as a Soil, we show them and provide a transparent and a reliable source of the yield for customers active in a crypto space. So they can allocate the stable coins into our protocol and generate a passive income, and they exactly know how we provide them, how we generate the income that we pay them. So they exactly know how we manage their stable coins that they allocate to our protocol. So that is a difference, because we show them exactly that it's not like a produced by printing some artificial tokens. The yield is generated by the real world assets, as we said at the beginning. So it means that we inject the capital to the traditional finance funds, private debt funds, and then to ultimate borrowers, medium and small companies, corporates that generate the interest, and then we bring this interest on chain and pay the interest to the providers of the liquidity. So yeah, that's what we do, and that's that is the main USP behind the Soil.
Okay, I got it, right. So the transparency in this case seems like a specific solution to a very specific problem, right? That you see in the crypto that is otherwise, the lack of actual transparency. Even though everything is on chain, we see many projects, just kind of like go and try to, do some crazy at times fraudulent transactions, they get the rug pulls all over, right? Even though they say one thing, to make everybody look in one direction while they actually do all the stuff behind their back. So there's a lot of bad problems. What other specific issues do you see in this industry that Soil actually solves?
That's what you said, yeah. So that the first thing is that the transparency, even though that some protocols and projects claim that everything is on chain, but at the end of the day, the only part of the let's say process is on chain, because you allocate some tokens, some stable coins, and you see, and this is a transparent, because exactly know to which smart contract you are sending the tokens, to which wallet you are sending the tokens, for example. And then you've got some yield paid, but at the end of the day, you don't know what is the mechanism behind it. Yeah, so simply you see the output and the input. And the problems that we saw in the past with some infamous protocols like, let's say, Anchor protocols, it was that the business model were unsustainable over the year, even though that let's say how they generate the profit was quite transparent, because they explained it quite extensively. But the problem was that the business model and the idea was not sustainable over the time, and it turned out to be true, yeah, that it was unsustainable. So that's the problem. So you can offer, of course, the sky high returns and yields, but only in the short term, because you need to show and prove that you are able to provide and deliver what you are promising over the long term. Yeah, and so you cannot only. I think that what was revealed in the last years, it was that you can build a protocol that is let's say, and the business model that is that works in a bull market, as long as you print tokens and you are able to sell these tokens to other market participants, and this is how you can fill the gap and supply additional capital to the business model. Yeah, but at the end of the day, when the bear market starts and there is no enough demand for your tokens, you cannot allocate more and more tokens to the market. Then you need to somehow generate the profits and from your business model without subsidies, yeah, because that's how I see it. And in our protocol, as we are generating money and profits outside of the crypto space, because we are generating money by granting loans, to the small and medium corporates, and they generate us cash flows in real money, fiat-denominated money. So our business model is not dependent on the sentiment on the crypto market. So no matter whether there is a bull market or bear market, what is the price of token? It doesn't matter, because at the end of the day, the core product is based on cash generation in a fiat-denominated money, and that's how we can deliver what we promised, and no matter what is the market shape right now.
Got it. And there's also always a lot of concerns about the security of the assets, right? Like you saw with the FTX, like you mentioned with Anchor FTX, even though there was some transparency documents, some documentation kind of like, magically slipped, away from the attention of the regulators, those who chose not to see, what was happening inside of the FTX, for instance. That brings always concern about the security. When we talk to traditional people, to traditional finance, to the whales, to funds, they ask you, okay, that's a great project, but how do we ensure the security, right? Speaking of which, how would Soil ensure the security of the assets? How do you ensure it? How do you measure it?
Yes. So how we are different from other protocols is that the particular liquidity pools are managed by the asset managers. And the loans are granted to the corporates and small and medium enterprises, and each of the ultimate borrower is you need to fulfill quite conservative terms to get a loan. On the average, success rate for if you apply for the loan is around 7%. So only 7 out of 10 or 100 companies applying for the loan got the approval. So they need to go through the conservative due diligence process, screening process, and at the end of the day, they also need to provide collaterals that will back the loans. So these are the bank standard collaterals like real estate, escrow accounts, revenues. You've got also personal guarantees and so on, so on. So basket of diversified assets that serve as a collateral. And that is a difference because actually this is this real world asset element, because first of all, we are granting loans to the companies that are not like a startups and new projects, but these are the companies with a track record with a very good financial standing, and they are able to provide sufficient collaterals that back the loans. These assets, as I mentioned before, these real world assets that serve as a security, serve as a back for the loans. And so in case of the default, we can use this collaterals and turn it into the cash and then have money to repay the loan. So that's the element that, as for now, is not possible to be 100% closed in a smart contract. Because it's of course you can write some smart contracts, but we know that we are very early in the adoption of the blockchain in the real world, let's say in the financial world. So still there are some challenges, especially resulting from the legal cases, that you cannot have a 100% asset on chain. So as for now, you cannot have the collaterals, as I said, 100% on chain because it's unavailable right now. But we've got the ecosystem that is ready, and we will add every puzzle as soon as each of these elements will be available on chain when the let's say traditional finance and the legal and so on legal environment will catch up with the technology.
Yeah, which takes time, right? Which takes time. The legal is
For
always
sure.
like, the SEC had all just appeared right after the Great Depression crisis in 1929, right after this time. Ultimately, so we always learn from our mistakes. We always should at least try to learn from our mistakes, and that's how we can at least get a slightly better chance of not falling for the same traps and getting a little bit more security also this way, right, to the entirety of the platform. And also speaking of the security, because ultimately that's the US point, that's the USP, that's the unique selling point for Soil, and one of the strong cards that you guys have. That also takes me to the strategic partnerships, right? Because having the right people around you, having the right people in a network, the strategic partners, allies, well, it always helps, right? Doesn't it?
Yeah.
So what sort of strategic partnerships have you locked in so far formed to enhance the entirety of the ecosystem and the growth for Soil?
So first of all, our crucial and the main partnership is a partnership with the Mount TFI. It's one of the leading private debt funds in the Central and Eastern Europe. So thanks to the fact that owner of the fund and CEO of the fund is also co-founder of Soil. So we know we've got access to the asset managers and the team and the funnel of corporates and small and medium and enterprises that we can allocate loans. So this is our main partnership, and the crucial one. Of course, we've got a partnership with some projects that are active in a crypto space. Right now, we are together with using a Chainlink. We are going to multi-chain because the protocol was built on a Polygon. Right now, we also have to get access to the Ethereum and other EVMs. We are integrating with the Chainlink. So this is what will be available at the end of the month or early August. So this will allow us to. We know that the Ethereum is the biggest ecosystem for DeFi, and that will connect us to, let's say, to the key players in terms of the liquidity in a DeFi. So yeah, these are the main two partnerships that from the technological perspective and from the, let's say, traditional finance perspective help us to scale up and build the trustworthiness and that make us reliable for the customers in the crypto space.
Got it. Speaking of the customers, community is a little bit of your customers to one side, right? Ultimately, anyone who holds a stake in a project, anyone who holds interest, who holds your tokens, is an interest basically of the best hopes for the soil token and the entire ecosystem. What I'm thinking is, what are the other benefits that it can share that the holders can expect soil to give to them in short and long term? What are the benefits for the holders?
Yeah, so first of all, we designed the tokenomics this way, that this is a deflationary tokenomics. So it means that the part of the profits that we generate as a protocol, we will allocate to do a buyback and burning activities. So that's how we will limit the number of tokens circulating in the space. What is crucial also, that if you are owner of our tokens, you've got a right to have a higher yield on your allocation in our protocol. So it means if you've got a certain amount of tokens and you compare with someone that has no tokens, you got a better products offer in our platform. On the other side of this equation, we are the marketplace. So our ultimate goal is to be a marketplace where the different funds can open their liquidity pools, and to get the access to our protocol, to get the access to our platform, our marketplace. Let's say from the traditional world perspective, if you are a founder and want to open your own pool, you need to have a certain number of tokens also locked in the protocol just to get the access to our platform. So these are the two different mechanisms on the other side of the customers from the, let's say, traditional finance and from the liquidity providers and liquidity takers, that they need to get a set number of tokens to be active in the protocol. And of course, the main mechanism is a deflationary tokenomics that limits the number of tokens circulating in the protocol.
Mm-hmm. I'm asking because, ultimately one of your latest tweets, which is awesome, is saying that the newest estimation from the Milk Road Daily is ultimately that the crypto industry growth for 2025 brings the lending category to the spotlight of a 3x increase from almost 3% now to 10.5% in 1 year. And it all adds up well, as the commentary says, with the trajectory of the growth for the soil protocol, right? So there seems to be like a good time ultimately, number-based, evidence-based for the DeFi lending protocols, for the market itself to continue its growth. And speaking of the growth, it's crypto is known for being very big of a burden, to the regulators, to the compliance officers, if you will. So how do you handle the regulators? How do you handle the compliance? How do you handle the legal landscapes globally at all?
Sure. I think that what is quite unique for our protocol is that we are compliant with the regulations. So we are registered in the European Union. And we've got the ultimate borrowers. We are, I think, that the only one lending protocol that got ultimate borrowers in the European Union, in Europe, and we checked it on the RWA portal, and on this map. We are the only one in Europe that got the ultimate borrowers. So for us, from the early beginning, it was quite clear that I've got like a quite extensive experience in the traditional finance for many years. I worked in the mergers and acquisitions. Nick as I mentioned, he operates, and he's a CEO and owner of a private debt fund that is supervised and regulated. So for us, being compliant with the regulation was like a no-brainer from the very beginning. And we've got there is no option for any gray zones for us. So we from the very beginning we worked with legal advisors to structure the whole business model this way that is compliant with the regulations. And we were able to, we've got we found the magic sauce, let's say, or the recipe how to build and structure the business model just to be compliant with the regulation, and not only for the regulation that was up to date back then in 2021 when we started the protocol, But also with the new regulations and changing regulations, we know that right now in Europe, MiCA regulations were implemented, and so we did a quite extensive analysis, and we knew before in which direction this legal act will go. So we also secure our business model that is compliant with the regulations. So yeah, we are also compliant with the MiCA regulations. So yeah, so from the very beginning for us, it was the designing model, let's say, was conducted this way, that we knew that we need to find out with the legal teams how we can start the business model to be compliant with the regulations. Because for us it was no-brainer. If we want to cooperate with a regulated and supervised financial institutions from the real world, for them, in the first question always is, guys, if you are compliant with the regulations. So yes, we are.
Correct. Compliance is a strong edge in this industry, and having good lawyers is also a good edge in this industry. Speaking of, of ultimately what's ahead for Soil Farm, I cannot help but look at your excellent, beautiful website. And what are the most significant milestones, checkpoints on your map, on your roadmap that you're most excited about in the coming months and years?
Yeah, so I mentioned that we are going multi-chain by integrating with the Chainlink. We are also about to open a short-term pool soon. So customers will have a choice, if they want to have a fixed yield for the longer period, or they need a flexibility with the short-term pools. So I think that this will be also a kind of game changer for our protocol, because we would serve different kind of customers with the different expectations. So this is it. We also are developing how we call it is a money making mechanism. It's a open protocol that other protocols can simply connect with Soil, and on a white label basis, they can offer products that are available on Soil. So for us, it will increase the customer base, increase the total value locked, and this is our main KPI, because that's how we make money. Yeah? So and when the total value locked is growing for us, it converts into more and more revenues. So that's how we want to scale up the business model, by opening the access for other protocols. So this is what we are working on. We also working on a special feature that will allow customers that allocated their funds for the longer period to simply get a liquidity earlier and utilize and get a gains on the changing in the interest rate. So if you allocated your stable coins for the longer period, you will have an opportunity to withdraw your funds, and someone else will get the opportunity to get into your shoes, but by getting the attractive yield. Let's say in the environment when the interest rates are going down, then for sure the yields will go down. But if you got a yield fixed for 1 year, let's say, with a certain fixed interest rate, you can simply trade your position into this contract. Yeah? So this will be another feature allowing customers to enter and withdraw funds earlier from the long-term pools.
Mm-hmm. Okay, that's interesting, and it also kind of like takes me to the most recent development over the Soil token itself, right? I just flashed the chart for a moment, which is something that we're going to go back in a moment as well. Although, can you explain a little bit more, share a couple of secrets about the economic model, the economics, the tokenomics for Soil token and token burns as well, the buybacks, that you have in the pipeline, and how that actually encourages, the token holders to hodl.
Sure. So first of all, what I said before, so we've got a deflationary tokenomics. Even though that we launched the token in October last year, we did three sessions, let's say, of burning tokens. One was in December, second was in April, and we did a burning last month. As I said, so part of the profits are allocated to buy back tokens and burn them. As in the second quarter of this year, we doubled our revenues from the first quarter. So this is what we promised to our let's say stakeholders, that we will allocate part of the profits to do a buyback and burn. So the announcement that we doubled our revenues in the quarter, we said, okay, we allocate part of the revenues to buy back tokens and burn them. So that's how we also limit the circulating supply in the ecosystem. I think that is quite crucial that we did a IDO in October, and in June all the vestings from the IDO finished. So we do not expect any more, let's say, selling pressure from the IDO participants. I think that this is quite important for investors, especially that very often participants of the IDO not are as loyal to the projects as investors that directly invest in the protocol, because as we know, very often IDO participants simply circulate the money and invest in different projects, capitalizing on the fact that they got access to the early investments. So it ended in June. We are very conservative about spending tokens, paying with the tokens. So we prefer to pay for let's say, some collaborations for marketing, for some services that are provided by some partners, rather in a cash than in the tokens. I know that it's very popular that projects are settling some balances with some partners by paying with tokens. We are avoiding it because we do not want to create additional selling pressure. We want to have a control over the supply of the tokens. So there is what I can assure you of, it's that there is any incoming release of the tokens or that will result in a selling pressure. There is no team is a long-term vesting, over 2-year vesting after 1-year cliff. All our early investors are committed for the long-term investment. So we also, when we talked with them, they are not right now interested in selling the tokens, especially that right now we are in the let's say before expected bull run. Selling pressure from IDO and some partners, smaller investors, was ended. So I think that, let's say, that from the vesting and token release perspective, we've got a quite bright future, but we'll see what next month will give us.
I cannot agree more. And well, ladies and gentlemen, this has been quite an exciting session with Jakub, with Jacob, with Kuba. From Soils at Soil Farm, and while you're here visiting their page on X, on Twitter, please do make sure that you search under @soil_farm, and that you actually go to the right upper corner and hit the follow button. That's definitely something that you might want to consider. And like I said, we are truly privileged and honored that the Birb has partnered up with Soil. So if you see a lot of excitement, there's a lot of reason for it. At the same time, if you see me going overly bullish, at times my job is to stick with the numbers. So you might want to take anything that I share about any markets at times, it's just with a little bit of a grain of salt. Although ultimately there are many, many good points, many excellent points that make me really excited as a stakeholder, as an investor, as a partner to Soil. Excellent product, excellent project, great team. Real world assets, security, transparency, fully compliant status, all what's missing in the space outside of Soil. So congratulations to you, Jakub, to Michael, to everybody on your team. You guys are doing incredible work. And thank you for coming over to our MA session. Is there anything else that you'd love to share with our audience before we go?
Thank you very much for having me today. Thank you for the warm introduction and all these good words about the protocol. Yeah, so I hope that all the negative sentiment on the market will end soon, and that's my wishes for all the crypto community. And let's give us this bull market that everyone is waiting for. Yeah, so it's all the best for the summertime, guys.
That's a good wish. That's a good wish, and I also join you on the wishes for everybody. Please do call big bulls. It's time to come over, and it's time to pump the markets. So great words, great wisdom from Jakub of Soil Farm, our excellent partner. Shout out to everybody who's watched and listened. Make sure you hit the subscribe and smash the notification bells on. You know the drill, you know the story. Let us get out of all the shadow ban on X, because it seems that many valuable projects are actually shadow banned as well, and they are not growing as fast as they could. And to make sure to commit and hit the follow button for Soil as well. Stay committed, stay active. And that's all from me. I've been your host, Adrian Zduńczyk, CMT Charter Market Ignition, CryptoBirb. And that's a wrap. God bless you. I'll see you around, and bye-bye.